fantastic. Thanks once again for having me to moderate another session. Good work, API events, WAPI Summit Virtual. It's the first of this magnitude, and I think we're just glad to be a part of it. And with me on this panel discussing the emerging models in real estate, West Africa's largest cities. Of course, is Tola Adesomi, his CEO at Split. We're just talking before we went live. They are spreading their footprint to Africa. It's a lot more work, but with what they've done in the past, I'm pretty confident they can pull it off. We also have Citie Adesomi, commercial manager at Citie. He has a lot of insight and he understands the industry, like almost no other. He's good with details, and I know that in quite a lot of our conversations, he always has a way of getting out detail that many people seem to miss. And of course, we have Elijah Agbola. He's just trying to find his way in. He's the mind behind Purple Capital, Purple Projects, Purple Maryland, and now they've gone into Purple Group. So today we're just going to be discussing how operational real estate models in West Africa's largest cities can work, what the challenges are, and just how exactly market players can make the most of the current situation. So as usual, I will start with a general question so everyone can get into the swing of things, and I'll go with this first question here. Either of you can go first. Now, what do you guys find as the operational real estate trends in your sub-market? I know Timmy is more industrial, even though he has more experience in other areas. I know Tola is tech, even though, of course, I know he has played in other markets. What do you find as trends in your sub-market? And in your view, what aspects do you think developers are focused on? And what areas do you find are less emphasized?
I think I'll let Tola go first.
Timmy, do you want to go, or should I?
Okay. Yeah.
Hi everyone. Again, my name is Tola Adesomi. I'm co-founder at Citie. I'll just go straight into it. What do I find that developers are doing in my sub-industry? To be clear, what we do at Split is rental, right? We automate rental, and we are decentralizing it from what most of Africa is used to today, which is annual rental and long-term rental, right? We're bringing about medium to shorter stay solutions and more comfortable and easier living solutions, so to speak. To answer your question, developers today, I'll use the Nigerian market, Lagos. I'm using the Lagos market as an example. They're building, what I would say they're doing wrong today is that they are building what the market doesn't need, right? And I think I say this all the time, that what the market needs in a place like Lagos, where 80% of the population, something percent of the population is young professionals and young professionals, middle class, millennials. What they need is 1 bedrooms, 1 and 2 bedrooms, 1 bedroom for the single people and 2 bedrooms for the newlyweds, right? And you tend to find a lot of multiple bedroom houses down here. And it doesn't make sense, because for me, I think that from construction down to rental, what we should be looking at is gathering data about what the demand is, right? And building or constructing to suit that demand. I find that the construction aspect of our industry does not take into consideration data, right? And what demand wants. They take into consideration investment. So what I mean by that is, what is the best value they can, what is the most value that they can get from what they build? So most builders will say on 1,000 or 2,000 square meters, they will build 8 3-bedrooms, right? Instead of bringing that and they will sell 8 3 bedrooms for say 45 million, instead of thinking about what demand wants and what demand can afford, and building 2 bedrooms, maybe 16 2 bedrooms on that same piece of land, so that the full cycle of the rent of residential real estate can be fulfilled. And what do I mean by the full cycle? Construction, purchase, and rental, right? And this is why we find that we have a lot of empty houses in Lagos, because most of the transactions end up with purchase. They don't get out to rental because people can't afford it. So you find a lot of people who are living very far from their business district or very far from their places of work, because people are not building to their spec, and people are not building to their needs, right? So yeah, that's where I'll take it up from here. That's what I think that the construction aspect of our ecosystem and needs to change or flip in their building process or in their thought process before they go to sites to construct these buildings. Yeah.
Okay, thank you.
That's it for me.
Timmy, over to you.
Okay. Thanks, Tola. That was quite interesting. Like Ayo said, I'm privileged to have worked in different sectors in real estate, even though my focus now is largely industrial. And like you mentioned by introduction, I am the commercial manager for Agility's logistics park here in Nigeria. And for those who may have missed Jeffrey's session, Agility is the largest warehouse developer in Africa. We own about 21 million square meters of warehousing across the African continent, with over $5.5 billion in revenue last year and over 20,000 staff across the world. And our aim largely is to develop a network of international standard warehouses across Africa, which we've already started in Ghana, now in Ivory Coast, and then put to an, of course, by nature Nigeria. And what we do, like I said, is we just build these warehouses, we lease them out, but there's a lot more detail into that. So where exactly is the developer focus right now in my sector, which is warehousing? Unfortunately, that focus has largely remained unchanged for decades now, whereby people are just building for basic storage, and that's what they're doing. And there's little or no focus on a lot more detail. So, for example, you have the 2PL people who are second-party logisticians who build the warehousing, which essentially is Agility's focus right now, even though we have other business arms. And then these guys just build the warehousing and rent them out. Right now, the focus is they just build commodity storage warehouses, no rule specifications. It is what it is, take it or leave it. They don't take into account what we, for example, as a similar 2PL developer, would include, such as the quality of the warehousing, the materials being used, the dock heights, availability of space for hazardous material storage, availability of space for cold storage, freezers, refrigeration, racking, all those layers that are just different from just storing commodities, so to speak. So there's that developer focus, and that's where we feel there's a gap which we are coming to meet. And there's a lot more. So even if you move away from 2PL to 3PL, where you have other players who lease the warehouse and then lease out pallet spaces, which means that you can just come and you have a little material to store. You can store in pallet spaces. You can call it like a service office type arrangement for warehousing, so to speak. So there are those that do that, but even they, first of all, are very lacking in the warehouse facilities to be, that they can lease, and then they find that they have to find that capex to be able to rack, to improve the quality of the facility and those kind of things. So that's what exists, and then that's what we are bringing into the market. And there's a lot more in terms of all of that that just goes way beyond. So, for example, we know warehouses are typically things that people believe are dirty, oily, stainy environments where people just go and do menial work. But if you go to Agility's warehouses anywhere in the world, whether it's Dubai or Ghana or Mozambique, you will find a neat and tidy environment, warehouses that are built to certain specifications and are kept tidy all the time. And then you have a bank on site, you have a cafe on site, you have a pharmacy, a supermarket, call it a lifestyle warehouse, where, for example, where people are just happy to, work in that environment and be able to do a couple of things that they would not ordinarily find elsewhere. So there is a wide gap between what is available in the market and what continues to be done and what can be done. And that's where we feel we can come in.
Your last comments about the aim of the warehousing concept in Dubai to meet as many needs as possible reminds me of what I think it was Paul of Landmark that said earlier in the day, and I'm hoping Laide joining us can speak more to that, where he spoke along the lines of the fact that any development that comes in as a single use, any development that comes in to meet just one purpose is dead on arrival. He was unequivocal about that. Now, there was a question I was going to ask Laide since she's dropped. So when he comes back, I will push it to him. But something common to what both Timmy and Tola have said is a willingness of people, developers, contractors to create projects and say, take it or leave it. I know Tola spoke, in that direction, and Timmy, said something like that. I mean, to buttress even what Tola said, our outlook report will be coming out in a few weeks, and what we're seeing is the vacancy rates are supportive of what Tola was saying. But why do we have this in the market? And then we'll go to Tola. To Laide as to what his thoughts are, on what developers are doing. Why do we have this take it or leave it way of thinking? And I will start with Timmy briefly, then we'll go to Tola.
I think, first and foremost, why not the take it or leave it developer? So I may not be able to get into the mindset of the take it or leave it developer, so to speak, but having started on the other side of the table, being representing clients and tenants in my not too distant life, I understand that it's a supply-demand dynamic. So when you know that the supply is exactly the same, and I'm doing exactly what the supply is, and the tenants know that this is what is available in the market, then it becomes a take it or leave it scenario. But similar to what happened in the commercial market 7 years ago, the script then flipped, which means that landlords became more savvy and then came into the market and then developed grade A offices. So it wasn't a take it or leave it scenario anymore. As a matter of fact, it was the exact opposite scenario, when landlords were looking to woo tenants away from take it or leave it scenarios that they were in already, offering them better buildings, better rates, more flexible packages. It became a tenant's dream. And of course, by natural selection, these moves happened. I think there was a time we did a research where we found out that 80 to 70% of the occupations in the new office buildings were relocations, and they were not new.
I remember that. I remember that.
Exactly. So it was just a case of these guys then had a choice. So the demand and supply dynamic then switched. So they take it or leave it landlords, and I was privileged to be on the opposite side of that table, where I was sat with a landlord who had found out that the tables had turned, and then they started to offer the exact opposite of what they were offering before, which were not.
Okay, but
they were then saying.
Timmy, your explanation, delicately puts it as it appears people have learned their lesson. But maybe we should move to Tola, because from what Tola is saying, from what Tola said, it doesn't seem as if the parties at play have learned what they should learn, and they still keep putting things in the market. Now I know he's speaking more to residential, and you are more to commercial. So Tola, let's have your thoughts on this.
Yes, there are more complex things that are involved in this decision process. One of which is the cost of land, right? I've always said, for the past 3 years, I've said that there's an artificial cost of land in Lagos. I'll use Lagos as an example. Now, you buy a piece of land for, say, 100 million, right? The builder or the constructor or the developer would want to maximize the value of that land, right? And to him, It's how many properties or how big a property can I put on this land, and can I sell it for 2x my cost of construction, right? That's always what they're thinking about. When you think like that, or when those kind of issues that they can't, the construction company or the builders cannot affect or influence come to play, it becomes difficult, right, in the decision process. Because today, I don't know what constructors are thinking. I've spoken to a few of them, and in Nigeria today, building house, because of the housing deficit, building houses is lucrative, right? But at the end of the day, if we are solving a housing deficit and people can't afford the houses, it becomes what exactly are we doing, right? I don't think that their thought process necessarily goes to demand or data-driven building, right? Their thought process doesn't go there. What their thought process is this is the cost of my building, right? And the biggest cost usually is the land, right? For me, is how do we backward integrate to maybe appeal to governments or appeal to landowners, or create systems where landowners can be in the, and this is because I'm a tech bro, this is where I would say blockchain comes in the process, where landowners don't necessarily sell land outright to builders, or don't necessarily create the JV systems that exist today, but are in the continuous transaction of ownership or rental of whatever is built, right? So he brings his own resource, which is land, right? The builder brings their own resource, which is building materials, expertise, all of that. And I'm just creating a scenario, and they build a block of 31 bedroom flats. Now we create a blockchain system, right? A smart ledger system where both parties own the real estate, right? And depending on what value they both value their contribution, right? They are in the long-term returns or return on investment of that real estate, not necessarily thinking about how to sell it off and making a quick buck, but thinking about long-term value that's being created for the renter and long-term value that's being created for both parties, right? I think if we have more of those kind of systems in place, value can be created in the real estate industry across board, right? People don't necessarily, someone that owns land doesn't necessarily need to sell land to create value for himself or for his generation. People that have expertise to build property don't necessarily have to sell property to create value for themselves. There's more long-term value that they're creating for every part of the ecosystem, which is the constructor or the builder, the landowner, and then the people that are going to rent. It's more long-term in that way. But I think it's a mindset thing. We Nigerians, or the real estate industry, we need to rethink how we do real estate at its core, right? And rethink everything that we do, and understand that everything is not for a quick buck, right? If we do that, we can create longer term value, and we can build to spec for what is needed and what demand would quickly take up. Like today, data driven on our own platform, we know that what people want is 1 bedrooms, right? We have co-sharing on our platform today, but people really just want their space and they want 1 bedroom. If we have a lot of that in places like Lagos and in Abuja, where younger people live, I can bet you that we can create value for all players in the ecosystem, right? If we go about that, and that's just one example. There are other ways we can create value without necessarily getting rid of these assets, and have these assets in the ownership of the long term of whoever is playing their bit in that value chain.
It's interesting you say all these things because you've gone through one bed, segueing into what Timmy said, and then you went into blockchain and then into data, and you see, it's glad. I mean, I'm glad that we have Citie here with us because looking at the projects that he has done, I am aware of all the data that went into the Maryland Mall, and I know the vacancy rates are 1% or 2%. I mean, the whole place is full. I also know that there's some mixed use projects. So I think he's found a way of without me being patronizing, cracking the code of finding what people want. So I guess it's only pertinent that I ask Citie, since you are here with us, what are the trends that you see in terms of operational real estate, and what aspects are developers focused on? And in your view, what areas are less emphasized?
Okay, I'm not sure if you can hear me. Can you hear me?
Oh, we can hear you.
All right,
loud and clear.
Right. Sorry, I came in a little bit late. A bit of technical issues. But yeah, Ayo, to me, Akitola, I think I've listened to what you've said so far, and in terms of what the market, where we see the market going, the market obviously is moving in a particular direction and is driven largely by a mixture of all of the things that have happened over the last 9 to 12 months, predominantly. I mean, we've been in so we've seen a lot more trends in people trying to now focus more on the smaller units. The smaller units are driven by the capacity of the people to buy those units and the universe of people that we can sell to, and then it makes it even a larger universe of people you can sell to, because you're also looking at the investor markets as well. And a lot of the things that we are seeing in terms of the products that we developed over 24 months ago, a lot of people know how long we've been in the market in terms of trying to sort out our financing issues to ensure that we can get to site and start building on this mixed use typology that we conceptualized over about 18 to 24 months ago. And funny enough, you then see that with the way and manner the market moved over time, you've seen COVID taking about 6 to 8 months, and I think it's still anyway, or 1 year of our whole lifespan, and changing the way we do business and the way we build structures and design them. We've then seen the NSAS situation now totally obviously changing all of our thinking process in terms of security, in terms of how we position, and obviously that is all of those things have an effect on how we finance transactions. So from conceptualization stage, I mean, people like Northcote, Purple, we work with people like Northcote, for example, to ensure that we have a data-driven study that helps us determine how we look at a project. I mean, going beyond just location, we now have to obviously dig deep into the structure of a transaction. What makes this transaction fly? What makes it work? I mean, if you look at Maryland, for example, when we did Purple Maryland, which was previously called Maryland Mall before we changed the name, there were a lot of discussions around the fact that, this land size is not so big, this ShopRite is not so big, the cinema is small. But the Nigerian environment in itself requires a lot of study, because not everything that works elsewhere in the world comes into the Nigerian space and actually works. So you need to actually adapt it to the environment. If you look at the typologies of what we do in terms of retail, building in itself for Purple Maryland is mixed in its concept, which is also why we drove the name change, because we wanted to be seen as something different. We wanted people to know that this is a mixed-use development that houses both private offices and co-working spaces, that houses entertainment as a driving factor, that focuses on food and people to be able to come into this space, not necessarily about the line shops and the groceries, but more about everything else that happens within this environment, which gives it that mixed use feeling. And we've taken all of that, and we've also ensured that in terms of how we break this thing up, how we break the retail spaces. We made them really compact and affordable. Affordability has come to play now in terms of what you deliver, whether you deliver it in the retail space, whether you deliver it in the co-working or private office space, or even in the residential space. You need to be able to ensure that the price points and the price sensitivity of human beings when it comes to such in this sort of recessionary times, you need to ensure that your price point, which goes back to the cost of build. And when we look at the cost of build in our own scenarios, we ensure that we look for contractors that are partners, right? We ensure that we look for consultants that are partners. We gone are the days of just feeding everybody and and leaving us with the storm for us to move things forward. What we've done with Purple Lekki is that we've taken all of those experiences and looked at it and said, okay, rather than us going multiple floors up, we need to now be able to build this workshop, eat, play, drink model on a few floors, and then have the leave added to it on the upper floors, right? And that has led us to obviously building on 2 floors, the retail and entertainment beehive, which will be available in the market from Q1, end of 2021 and beginning of 2022. And if you look at what we've done there, we're already 67% occupied in terms of the retail and entertainment spaces, right? We have domestic anchors. Affordability is important for them. Being able to pay on Naira leases is important for them. So the way and manner we do business, the way and manner we do retail, the sizes of these shop spaces, more so what we've now done is to ensure that we now put in a full department store feel. If you go into a John Lewis, you will see a Waitrose attached to that right at the back of it. Yeah. In this case, at Purple Lekki, what we then did was to then be able to put in an anchor retailer in a 2,000 square meter box, right? Market Square, major domestic player that can also deliver on the same level of quality and standards, because we've looked at all of their stores in the South and the Southeast. And these are the things we need to start seeing propelling these scenarios of COVID and all of this and NSAS and all of the outcome of it, as obviously seen that our thinking process in us being able to align with the domestic markets and with the SME space is very important in how we grow retail going forward, right? We've then also gone into the fact that we've taken our open feel and ensured that we have a department store feel. So you're almost coming, Purple Lekki is almost like coming into a John Lewis. And what you then see is that we're forming alliances with consulting firms that work with the small and medium enterprises to be able to build a system, because this is new. This is even better or stronger than what the Grey Velvets have done. We are creating an ecosystem of small, medium enterprises that will then take even up to shelf spaces, as small as shelf spaces and as small as concession stands of 3, 6, and 9 square meters to be able to warehouse their product. We are not chasing people from the high streets of Admiralty or anything like that. What we are saying to people is that you should be on the high street, but you must be in an ecosystem like Purple Lekki, and that is what is driving the growth that we're seeing in terms of sign-ups and occupancy that we're seeing at Purple Lekki. If you then go to the entertainment floor, what we've seen is that we with Purple Maryland, we're seeing a good drive. Where of course during the COVID period everybody was completely hit by people were locked away, they couldn't come out. But we saw what happened, and I think Paul had said it earlier on in the day that what had happened was that once they opened the doors and everybody could feel a sigh of fresh air, people want to gush out. We've seen our numbers, because using data on the tech basis, we've been able to monitor our data, and as we opened the cinemas, we can see our data in terms of foot traffic coming up, right? Which is essentially showing you that we are more of an entertainment center than actually just a grocery store or a retail center. And what we have done in Purple Lekki is then to be able to bring a bit more. So we're bringing in the bowling alleys, we're bringing in the rope games, we're bringing in the arcades, the bumper cars, the skating floors. We're creating a full value proposition that ensures that families singles, couples, families can fully enjoy the atmosphere and also watch the movies. We have an anchor with Genesis Cinemas. So when you then look at it with the co-working floor that we have 3 or 4 various parties talking to us to sign up on this, on the co-working and private office spaces. We are watching the market to determine how to move forward and how to play it, because we also want to, because with the current market situation, you need to be able to read the market, which comes to agility of what you build and how you build it and what you see. And we've seen a lot of trends and a lot of support coming in, a lot of sign up coming in from as far as clinics. We've signed up a clinic, taken up a space up to well, I don't need to give it size, taking up space. So the use of the property, the use of the building is very important. Now on the multiple level floors, where we then have the sort of short stay, long stay, the live component of these mixed use facilities that we begin to see, you then see that we have actually sold out 75% of the stock we want to sell. And that's tells you that the price point in which you sell requires a lot of data, because people are buying this thing from an investment perspective. And some are combining this from a position of, oh, I could also live here, or my family, my children can live here, or other people can also, and then we've seen a lot of trend from even the guys in diaspora that don't want to have big, massive properties in Lagos or in Ikoyi or in VI, but they want somewhere that is yielding for them, and they can also stay in whenever they're in Lagos or whenever they are in town. So you're seeing a totally different mindset in terms of how you build, how you design, how you do spatial configuration, spatial combination. In fact, as we were designing and getting towards issuing as the contract as our last month, we made changes as to where we put the gym and where we put the pool. You know, these are because we're seeing a bit of a different sort of clientele base. It's a different sort of design. I mean, we've sold, in terms of units, we've sold units in multiples of billions during this COVID and during this recessionary period. But it shows you that the cash provision is there. I mean, I read a write-up by yourself, Ayo, earlier on today, where you said we are the product of ourselves. We are what we make it, right? In terms of, if we are all taking our naira and converting it into US dollars and shipping it out of the country, but not investing in the country and not taking advantage of the products that are out there, then we're obviously part of the problem. It's a systemic problem. So we shouldn't just blame one side. We should also use this opportunity and these products and these ideas that are now coming out into the marketplace to also use that to galvanize growth in the marketplace. And I mean, when we looked at it and we saw that we've done some 5% of sales, I think I put a call up to Ayo, your partner, Tayo, and I said to him, I think this is the product. I think we need to now go to the mainland. Why was this driven? It's also because of, you need to be able to provide a product that can be afforded by both the middle, both the lower end of the market and the upper end of the market. And you need to look at the market sizes, what the product typology they need, and actually start thinking deeply into how you structure these structure the products. And more importantly, what it comes to play is that when you have this sort of scenarios where the government is responding with a low interest rate regime by their actions, what you then see is that what you need to stay in play is to ensure that you remain liquid. You know, liquidity is very, very key in what you do when it comes to this sort of massive mid to long-term projects. So you then ensure that your lines with your bankers. So we are opening up with having discussions with our bankers, both the commercial bankers and the developmental banks. And we're seeing a lot of traction. We've gotten approvals and we are starting new discussions. We're refinancing our existing positions. We're reducing our interest costs, and we're bringing in additional new equity capital into the system. So we're using this beyond all of the noise and everything going on. We also all need to start using these opportunities to restructure our positions and now take advantage of the position to ensure that we're driving a growth strategy that over the next 2-3 years, we can then look back and say, yes, there was COVID. Yes, there was a recessionary period, but we are now out of this period and we are looking much bigger, much better, better financed, and much stronger. And we can then know that we are positioned for the future to be able to deliver more mixed-use assets or to the general public. So that is where we are positioned as Purple, and that is where we believe that the market is. Landmark has obviously taking that direction with their mixed use project. For us, we are also taking this mixed use concept and expanding our existing mixed use concept at Maryland to also include the leave, because it is when you have this multiple asset and these multiple classes of real estate and the revenue streams that come from them, that you then know that you have a sustainable project, whether in an up market, whether in an up market or a down market. And I think, Ayo, I think I've probably taken a good shot. I hope my coming in late wasn't too bad after all.
Because I was wondering if you should just have arranged this as a masterclass between me and you. Then, you know, myself, Timmy and Tola can have our own conversation elsewhere. But for me, in a nutshell, you've explained a lot of the details that go into ensuring that projects are able to navigate whatever economic challenges. And interestingly, you touched on something that, you know, we had written about, and I think Timmy and Tola find it beneficial, that in the mid to long term, looking at these vandalizations and all of that, the money that will be working in country will be local money. And so I want to believe, and I think Tola also said that, you know, that gearing up your projects and looking at your development and catering to the local. He spoke about, you know, the 1 bed and the 2 beds, you know, we'll see more demand, we'll see more pickup and things of that nature. I think maybe Timmy might have to do a bit more navigation because he's doing, you know, grade A, you know, high-end premium warehousing space, and I'm sure he has his own plans. But I will just take on a few more questions, and as we can, let's keep our answers maybe within 1 or 2 minutes so we can be out in time. So Tola, my next question goes to you. Could you give us more detail as to the role data plays in your own design process? The reason I'm asking this question is because we've spoken before, you know, I've looked at your work, I've looked at your results, and your success rates are unbelievably good. So you have your data system on lockdown. You know, in less than 2 minutes so that we can move to Timmy and back, you know, what role does data play in your design process, and how does this factor into your model?
Yeah. I would pick one data set, right? For us, with a waiting list, right? Okay. So people come to us, they want to rent a space, right? And when we go out to hosts, or when we are trying to onboard hosts, as we have right now on the platform, we're very particular about how small the team is and where we put our resources to based on what our demand is, right? So for instance, we know that a lot of people want more affordable places in Lekki or VI. And regardless of how difficult that is, because of the co-sharing capabilities that we have on our platform today, which sort of reduces pricing, right? We sort of drive traffic from the host, which is our supply. We drive a lot of traffic from that side of the platform. Then when we see that our demand is skewing towards another, you know, location, say Yaba, for instance, because in the past couple of months, just because people think Yaba is cheaper, we've had a lot of requests. Oh, I want something in Yaba. I want something in Yaba. We sort of start to get our supply or drive the most supply that we can get in Yaba. I'll give an example. In December of 2019, we knew that over 200,000 people were coming to Africa for one thing, right? And they were coming for the event that was happening in Ghana, right? Everybody was coming. And for us, having that data was very important in driving our marketing and driving the sourcing of supply. So we took it as a time to test Ghana, right? Okay, people are coming for short stays. They're going to stay 2 weeks, 1 month. How do we start to
Can I just say something to Tola? Tola, we're supposed to have been aligned even on Purple Lekki. I remember I saw your split on the blotter on a few of the units, and now I fully understand where you're coming from, why you're moving left to right and can't make a final decision. And I hope today you will make this commitment, because everybody's looking at you right now and everybody's looking at me right now, and we are supposed to be aligned. Data is important, right? That's why we're also providing diversity in the sense of what we're doing in Purple Lekki. We're now trying to replicate the nanos, which we branded as Purple Nanos, right? Which are the short, long, and sort of hotel apartments, right? And we're bringing that concept into the mainland, right? So we want to create. We've seen a lot of demand because people wanted. Some people, despite our sale level in the multiples of billions, people still wanted something slightly cheaper, right? I can remember even as far as 72 hours ago, myself and Tayo on a Sunday, we were still debating late into night on a particular location on the mainland, what price points we need to go to the market at. And that is also...
ready to go down? Are you ready to go down?
Oh, no. So, somebody mentioned something about land prices. Land prices are fundamental, right? Land prices determine what you build. Land prices determine the percentage, what the ratio should look like, and of course. So when you look at it, location is important, because then the mixed use nature. The research that we did and we commissioned with Northcote and we looked at showed that there were huge demands by people within the middle class in paid employments or even in self-employment that don't even want to live in massive houses like our parents did. They want to stay in, as far as they know, 3-bedroom, well taken care of, well maintained structures, right? With mixed use facilities that like the gym, the bars, the basketball court, and all of those things are things that we've taken into consideration in how you build a new location. How we put in these new structures and put them out there. So I think there needs to be an alliance. When you look at all of these data-driven components, there needs to be an alliance between Split as a company, and what we do, in terms of delivering these brick and mortar products that have a mixed use element to them, because what we're trying to do is obviously make it easier for people to live in a location, work in that location, shop in that location, and also generate their entertainment within that same location without even having to drive any distance. And that is what is being driven. That is what is driving everybody now. People want to stay, even when you have the money, you want to stay in a gated community. You don't want to just get a big, massive expanse of land and build such an elaborate building, because you find security in just being in a communal type of environment and having all of these resources around you to be able to shop and do all the things that you need. So you can see that with the way and manner the market is going, right? And in the next five years or so, we definitely may not necessarily be talking about a single asset class of property in the Nigerian commercial space. We will be referring to commercial properties as just pure mixed use property, because that's what sustains your revenue flows on the multiple level.
Coming in. So the way this is going, I feel like, we residential guys, when I mean we now, I mean, the way the conversation has gone, we seem to have hacked this thing a bit. So with that confidence, it's like, the engine is just revving. And, if I leave Olaide down, he will take us to how he's going to take over the Kenya market. So that's why it's important that we address this next question. And it's to Citie. You see, because agility has come in, and as we can all see, it's out there. They've been at this for years. They have decided to take on a horribly difficult market. And they want to produce or introduce a premium product at a very moderate price. The data is out there, if you look at it. So I think my next question should go to Citie. So what do you think the challenges are with the industrial sector right now, and what are the things you have to look into to develop this kind of a model, and how do you see it growing moving forward?
So I think the proof of concept has already been done by other sectors, so to speak. I mean, Laide's Propol has done an excellent job in the real estate sector. I mean, the usual suspects have done what they've done in the commercial sector. So it more or less is the final frontier, right? Like, what else is there to do? And because, again, like Tola and Laide have said, the data is there. On the tenant side, I know exactly what I saw in terms of what would come to me as a requirement and what we would meet in the market, and the huge disparity that occurred in there. So the data supports the fact that, look, there's a massive need for this, especially if you consider the fact that if you go out there today, the guys who are doing this thing big are having to do it themselves because there's just no supply out there. I mean, the usual suspects are there: P&G, Agbara, Nestle, Shagamu Interchange. The list is endless. They just cannot find anything that is up to the specifications that they cannot compromise. And that is exactly where, we, for example, have two different types of products where we will build speculatively into the market, come and lease as small as 500 square meters. And then if you want something specifically built for you, exactly the way you want it, to the international standard, whatever standard you want, we can build it for you and you will still lease. So we've taken away the capex headache from you. But it is not without its challenges. I think one word I've heard many times today on different panels and different calls is infrastructure. The infrastructure is always a problem. And like Jeffrey said, I think the best thing to do is, I mean, like I heard Harrison Ford say recently, is get out the way, right? I think the government needs to get out the way, but the government also needs to embrace the guys who are coming in their direction. So public, private, all those things, everybody just needs to work together, because let the government not think or they have the headache to themselves, because government cannot do it all. We just need to understand that. And even though there is the private sector will and interest to do it as well, it must be met by government support. I mean, Tayo said in his book, for example, there is no public housing, there's absolutely no mass housing that can occur anywhere in the world unless the government is in assistance or in support. And the same thing happens. So infrastructure is a problem. And then the elephant in the room, Olaide, I think, has cracked this, and I'll probably come and take some tips from him. The FX is always going to be a problem. How you're going to solve your FX problem, especially if you are leasing at dollar index leases, it's going to be a problem.
I'm not sure that I've cracked it, but it keeps moving. But I think what is important to me is that we are operating in the more we look at it, no matter what the leases we have, we're operating in a domestic market, and this market is susceptible to FX changes negatively against us, which implies that we need to build products that can stand the test of time and remain affordable. Which is why when I said we're looking for contractors that are partners, we want them also embedded in the project so that they have the reason to ensure that we achieve success in the first instance. Achieving success on a project is one thing. Operationally achieving success and keeping our revenue flow going is another thing. We know how much concessions and grants we've had to give during this COVID periods and the outcome of it. We don't want to see a repeat of this. We know the extent of security challenges that we had to use to protect ourselves during the last xenophobic attacks, during these COVID attacks. We know what we had to do to ensure that Pop Maryland stood out amongst all the other centers. And we don't want all of those things to come and play when we are still trying to define what we need to do with regards to FX and how to curtail it. Liquidity levels needs to be high in the system in terms of what we're doing, which is why we are ensuring. I mean, before COVID, a lot of people remember that we came out to the market with a proposed bond issuance, right? And during that process, we also re-strategized, and everybody said the COVID issue was a long-term 7-year, 5-year issue.
Yeah.
We re-strategized and saw that this COVID issue is actually a 1-year issue, and we can see vaccines coming into play, which implies that hopefully by the time it gets to Africa, maybe West Africa, it'll probably be summer next year. But at least we can see that the African continent is not particularly affected, which means that some of the things and steps that we're taking in the right direction as we move along, which means that if we're building projects over an 18-month period or a 16-month period, we should hopefully be able to cross over these terrible times. But it also shows that we need to build something in terms of our revenue flows that can stand the next wave, another COVID of another time, or even another hoodlum attack of any form that lasts more than a certain given period of time. Which implies that there must be a deliberate domestic approach to funding how we build in a cheaper manner, which includes being able to ensure we take advantage of regimes of scenarios like this where the interest rate regimes are lower, and be able to get as much long-term financing to be able to take on as much projects, because the deficiency is still there in terms of looking at the residential space. The deficiency is there. If you still look at the technologies, if you still look at the retail space, people still need to be able to use their community, their neighboring and community approach, like the concept we use, to be able to deliver products to closer to the people in the densely populated areas, right? So the brick and mortars are still important. What we are doing, for example, and Ayo is fully aware, is that we have also introduced some elements of technology into what we're doing in terms of now launching our Purple.shop, which is coming to stream, which would house a lot of our domestic retailers and their products onto a platform, which would then also be able to open to other third parties, which ensures continuous flow of retailers into our brick and mortar and also into our online space to be able to continue selling more products for our customers, so that they can ensure that they also stay continuously in business, whether they're in a brick and mortar, whether on the mainland or on the island, or as we proceed forward. But generally, the domestic conceptualization of financing needs to be done. And of course, there's a lot of talk around the pension fund industry. I think we've seen a REIT recently closed by Chapley Denham, which implies that we should be able to, if structured properly, we should be able to get more financing from the pension fund industry to take on long-term development projects. If you look at anywhere else in the world, from New York to South Africa, what we have is the pension fund industry taking a firm equity position in putting out there some of the best commercial or mixed-use developments. So no matter what we do, the financing powers cannot be just from Purple just moving on its own. There needs to be a concerted effort amongst the entire landscape, from the capital markets and also from the government side, to ensure that what we build as a targeted entertainment space, right, or mixed-use space with various elements of it, is fully and properly funded and has sufficient funding opportunities within our domestic markets. Gone are the days where we are all looking at international markets for dollars to finance our projects at single digits. Now we have single digits. We now need to give them bankable projects that they can all back and take us forward.
Wow, thanks a lot for that. I think we're almost out of time now. I see how Laide, you neatly escaped the FX question. You answered it, but you didn't answer it. So it's okay. So Timmy knows what happened. He understands what happened. But it's been a really great session having each and every one of you here. Thanks once again for taking out the time to be here. I think it's all from me here. Thank you very much, and have yourselves a good evening.